The Nifty is just below that 10,800 mark, 10,797 as we speak. And what's taking it lower right now are a couple of these IT stocks. In fact, the IT index is at the low point of the day right now. And that's because TCS, Wipro, HCL Tech, all of them have moved off the highs. They're at the lows of the day, causing a bit of a drag onto the Nifty from the highs of the day. HDFC Bank and HDFC Limited too have seen a bit of a sell-off from the top of the day. So interesting, because those are the only financials which are not doing well. Other than that, we have the housing finance companies. Indiabulls Housing Finance is what we spoke about earlier. Repco Home Finance, that one too higher by about 8.5%. DHFL higher by about 6.5%. And we have Canfin Homes higher by 7%. So the financiers, in particular the home lenders, are doing fairly well. Among the financial space, two stocks that haven't done too well, while they're up by about 2-3% today, have been PFC and REC, but they have been sulking over the last few trading sessions, and that's primarily on account of the overhang on the impending deal. Moody's, in fact, has come out with a note on the recently announced PFC REC deal. Remember, the cabinet gave its nod to a strategic sale of the government shareholding of around 52% in REC to PFC. To discuss this and more, we have Srikanth Vadlamani, who's the VP of Financial Institutions Group at Moody's Investor Service. Thanks a lot, Srikanth, for joining in. What are the key issues that you see in the PFC REC merger?
So, from a PFC perspective, the key credit issue that we see is that the capital level of PFC at a consolidated level could materially come down because of this transaction. The decline, depending upon the various variables, could be as much as 200 to 300 basis points. So it is really the main reason why there is negative credit pressure on PFC. And in the case of REC, given that PFC will be the main shareholder now and the main support provider, negative pressure on PFC will translate into negative pressure on REC as well. So these are the main issues.
Okay. So the capital of PFC will come down materially by at least 200 to 300 basis points. Srikanth, morning. So we can understand why PFC's rating could be a little more stressed. But if you could just elaborate a little more, any other parameters which you will be tracking very closely post the merger takes place?
Yeah, because the capital impact is primarily happening through the PFC to PFC. Now, for both the entities, will also be thinking through in terms of, or seeing through in terms of, how this will impact their liquidity profiles. Because in the case of PFC, they will need to raise funding to finance this transaction. So we'll see how that will go through. In the case of REC, on a standalone basis, we will be looking through in terms of any impact on its liquidity profile because of any accelerated repayments of bonds that may be triggered. We'll be looking into that as well. But as I said, the key point would be on capital channel, which will impact primarily PFC.
All right, you spoke about the key point being capital. Speaking of capital itself, how do you see PFC's ability to raise capital post this transaction?
Well, as of now, we are not building in a scenario that they will raise equity, because we haven't heard, the company has not announced any plans to do that. But if it is able to raise equity and hence make up for this capital drain, then obviously that will be an important mitigating factor. But in our base case, as of now, we are not factoring that in because we have no visibility for that.
But do you think, that is something that PFC will do, raise money to fund the transaction? And what could be the route?
Well, I mean, the company has not disclosed any of its plans, but our base expectation is that it will be debt funded.
Okay. All right. You said, it would be credit negative for PFC if at all the deal does go through. So in terms of liquidity and rating, what are the key ratios that you're tracking, and how do you see that changing post this transaction if it takes place?
So the key ratios we think through are in terms of the amount of liquid assets they have on their balance sheet. We look through in terms of how is their ALM profile. So these are the factors that we'll be thinking about. Now, the way it will impact both PFC and REC is that in the case of PFC, obviously, this is an additional funding requirement that is there in addition to their ongoing business. So, and they probably, depending on how soon this deal happens, the window is probably quite relatively short. So again, to put it in perspective, that is not the main risk why we have taken the negative action. As I said, it's on the capital channel. At the same time, on an incremental basis, we will need to see, especially given the sort of volatility that has happened, that has been seen in the markets over the last few weeks, although now it has started to improve a bit. So in the light of all that, this is something that we will keep a watch out for. In the case of REC, I think maybe in some of its outstanding international bonds, I think there are a change of control clauses. So again, we have to see what are the implications of that, whether that will be triggered, whether that will lead to any accelerated repayments or not. So on that, again, as I said, we are not taking a view that is going to happen, but that is something that we'll keep an eye out for.
Okay, just one final word, Srikanth, then the synergies and the weaknesses that you see in the merger.
See, I think from a synergies perspective, it is an obvious fact that they operate in very similar segments of financing. So operationally, there is a lot of commonality in what both the entities do. But whether that will translate into any tangible synergies or not, one has to see, because when we think from a funding perspective, they already, I think, have some advantage as far as funding is concerned because of their status as some sort of a quasi-government organization. So their access to markets already is quite good. Their cost of funding compared to similar organizations is already quite good. So I don't know whether there are any obvious further synergies that can be realized, but the starting point remains that from a conceptual perspective, the fact that they are operating in very similar segments is a positive as far as the two organizations come to start to work together.
Srikanth, thanks a lot for joining in and giving us all those details. With that, we are out of time on this edition of Chartbusters. But as we wrap up on the show, we leave you with some market opinion coming in from Sridhar Sivram of Enam Holdings.
Tell me one HFC which has declared a large NPA on builder loans. You can't remember any of them, right? And when it comes to banks for the same sector, about 15% is NPA. So how is it possible that banks have 15% NPA and the HFCs don't have? And the reason is that the HFC norms are very lax. An HFC can restructure a builder loan, and the NHB guidelines doesn't provide for any disclosure. I think there is a lot of NPA sitting in HFC books, especially in these two categories. There is a crunch as far as liquidity is concerned. The rates have gone up. The securitization rates have gone up by 200 to 300 basis points. Nobody will come and say on the channel, but when you actually go and meet these NBFCs, so they are having significant issues on liability side. We will see the impact of that when we see the third quarter results. So there is an issue. So I really don't I'm not in RBI's camp that there is no issue. There is an issue, but I hope that the issues are resolved along with some sort of AQR.